Hello and welcome to Virtual Investor Conferences. My name is Anthony Kraus, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from PetroTal Corp. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome David Popowich, Director, Investor Relations of PetroTal Corp, which trades on the OTCQX under the symbol PTALF and on the TSX under the symbol TAL. Welcome, David.
Thanks a lot, and good morning, everyone. Thank you for taking the time to join us today. My name is Dave Popowich. I'm the Director of Investor Relations for PetroTal. And before we begin our presentation today, I'd just like to point out that my comments today will include forward-looking statements, so please see the appendix of this presentation for our legal disclaimers. If this is your first time hearing about PetroTal, we actually have a fairly simple story. We are the largest oil producer in Peru right now, and our entire production base is actually pictured right here on this opening slide. You can see our drilling rig and production facilities are situated on the banks of the Ucayali River, which is generally considered to be the primary headwater of the Amazon River. Moving on to slide 2, we just have a corporate summary. Our main asset is the Britannia oil field in Peru's Marañón Basin. This field was discovered by Amoco in the 1970s and was subsequently appraised by Gran Tierra Energy in 2013. So we spun this asset out of Gran Tierra in 2017, and since then we've increased production from 0 to more than 20,000 barrels per day. Our stock has a primary listing on the TSX in Canada and is also listed on London's AIM market. Our corporate headquarters are in Houston, where I'm speaking to you from today, and we have about 200 employees in our office in Lima. So PetroTal was started by our CEO, Manolo Zuniga, who's a native of Peru. Manolo previously ran BPZ Energy, which was another Peruvian exploration and development company, from 2001 to 2015. He has over 30 years of experience in the Peruvian oil industry and is very well connected with senior industry and government leaders in the country. We have a very well-rounded management team with experience across Latin America. Our CFO, Camilo McAllister, recently joined the company in May 2024. He previously held senior leadership roles with Constellation Oil Services, Pacific Rubiales Energy, and Ecopetrol, among other companies. On this slide, we've given a few of our key operational and financial stats. Our production guidance for 2024 is for an average of 16,500 to 17,500 barrels of oil per day. And as of the end of Q3, we've already produced an average of 17,200 barrels per day. So we're in good shape to meet our production guidance this year. Our current share price is 47 cents a share, which gives us a market cap of approximately $430 million US dollars. We ended the third quarter with a total cash position of $133 million. And I would also like to point out that we have no debt on our balance sheet right now. But in terms of working capital adjustments and other balance sheet items, including some derivatives, we characterize our net surplus at positive $10 million. So slide 5 kind of summarizes the investment thesis for PetroTal. At this point, I would say that we're largely a development growth story. As I mentioned a moment ago, we have no debt and are focused on increasing production and reserves from our Britannia oil field. For a variety of reasons, which I'll explain to you in a bit, we do have some constraints on our ability to grow this asset, so we are currently returning most of our free cash flow to investors in the form of a dividend, which we've now paid for 7 straight quarters. Over the longer term, as we open up some new export routes in Peru, we believe there is still lots of running room on our Peruvian assets, and you'll start to see us invest more in growth projects. We believe our assets are very well suited for a dividend policy, and I think you will continue to see that as a core pillar of our investment thesis going forward. So this map should give you a good idea of our operating base. Northern Peru is shown in a light gray-brown color here, and the Britannia oil field, which currently accounts for 100% of our oil production, is located near the center of the map on Block 95, which is pictured in blue. As I mentioned earlier, Britannia is situated on the Ucayali River, which flows from south to north along the blue line here. All of our production is currently exported from Britannia on barges, which are shipped down the river to the city of Iquitos, which is shown here beside the number 2, or further down the Amazon River to the Brazilian city of Manaus, which is shown here beside the number 3 on the right-hand side of the slide. We've also shown several of Peru's largest production blocks in dark gray here. The Marañón Basin in Peru has a history of oil production dating back to the 1970s, but in recent years, the development has stalled due to a combination of social and infrastructure issues. Specifically, Peru's national oil company has had difficulty maintaining uptime on the ONP pipeline, which is shown here in pink, and that is the main transport route out of the Marañón Basin. That goes over the Andes Mountains and to the Pacific at the port of Bayovar, where it's then exported around the world. So PetroTal and PetroPeru are working hard to open up this route again, which would help clear the way for some of the growth initiatives that we are working on right now. On this slide here, we've shown our history of production growth from Britannia. As you can see, we've delivered fairly consistent production growth since the field began producing in 2018, and we think we're in good shape to continue our growth trajectory in 2025. Britannia has recently been producing over 20,000 barrels of oil per day, and with recent investments in water handling capacity, we think the field is capable of producing over 23,000 barrels per day on any given day right now. We are investing $150 to $175 million of capex this year and expect to generate between $200 and $240 million of EBITDA on an annual basis. Again, we have no debt, so most of our free cash flow is returned to investors through dividends and share buybacks. We've already returned just over $53 million to our shareholders this year, and once we pay our December dividend in a few weeks, this total will increase to approximately $67 million. All of this is to say that even though we operate in a relatively remote and some would say challenging part of the world, PetroTal has a solid established track record of delivering for its investors. This slide right here shows a map of the Britannia oil field. Our production facility is located near the center of the map, and you can see that we've been developing the field with conventional horizontal wells. I would say that the rock at Britannia is truly world-class. Our new wells are capable of producing up to 10,000 barrels of oil per day without any fracture stimulation. The field has a very strong aquifer, which is going to help drive high recovery factors. But I should point out that it also does contribute to some facility constraints, as we have to match our production growth with investments in water handling capacity. So that's something that we're always managing as we continue to grow the field. On slide 9, we cover some of our reserve growth trends. Similar to our production growth profile, our development program at Britannia has contributed to stable, predictable reserves growth. As of the end of 2023, we had booked 48 million barrels of proven oil reserves from the field. And keep in mind that the field has already produced over 20 million barrels of oil since 2018. So we see this as a very reasonable target. Our 2P reserves are currently booked at 10 million barrels, and based on our independent reserves report at the year-end 2023, they have an NPV of $1.6 billion. This implies a recovery factor of just 26% at the field, and we think that given the quality of the rock, there is upside to around 34% over the full development of the field. This graph on slide 10 shows the production profile implied in our reserve report. As you can see in the light blue, we believe there is good visibility to at least 25,000 barrels per day over the medium term from our 2P reserves profile. In a blue sky scenario, which is shown in dark blue here, which would involve improved access to markets, we think the field is ultimately capable of producing over 30,000 barrels per day. But there are a variety of considerations that we have to take into account to reach that level of production, including water handling production and water handling capacity, and most importantly, our current license contract at Block 95 does expire in 2041, which is only 16 years away at this point. We are in the process of lobbying the Peruvian government to push out the expiry date, and while we don't expect any news on this front in the near term, we do think that there is a high likelihood that the government will allow us to continue operating this block, given our successful track record in Peru. On slide 11, we've summarized the returns on investment from our existing development wells. In this slide, the larger the circle, the more times a well is paid out. And as you can see, many of our wells have already recovered more than 3 times our original investment. So even though our wells are fairly expensive to drill, usually costing anywhere from $12 million to $12 million to $15 million to drill and complete, we believe they are excellent investments. The initial production rates from our most recent wells, which you can see on the left-hand axis in this chart, have been in the range of 5,000 to 10,000 barrels per day. Our sales price is directly linked to the Brent benchmark, which is a premium to WTI, and we have been reporting corporate EBITDA netbacks in the range of $35 to $40 per barrel over the past few quarters. And we would say this compares very favorably within our peer group, and it's a key reason that we're able to generate so much free cash flow and return capital to investors. On slide 12 here, we've given a quick overview of our erosion control project, which is wrapping up this quarter. I would say, unfortunately or unfortunately, this is one of the hazards of operating beside a large river, but we will have to make a significant investment in the foundation of our field over the next 18 months. As you can see on the right-hand side of this slide, we plan on installing a series of 5 breakwaters on the riverbank in front of our field and in front of the village of Britannia, which lies just to the north of our field upstream here. The project is expected to cost between $65 and $75 million in total, and the spending for that will be spread out over 18 months. Really starting now is when our expenditures for this project are starting. The expenses will appear both as an operating expense and as capital expenditures in our financial statements. I would just note as well that we have been planning this project for several years now, and we do not see the incremental expenditures as having an impact on our ability to return capital to shareholders or to grow production during this time frame. Over the next few slides, I just wanted to spend some time talking about our growth opportunities that we have within the company. I would say that Peru is a very prolific hydrocarbon province that has been undeveloped for a variety of reasons over the past 30 years. And PetroTal is one of only a few companies that has a proven track record of success in Peru, and we think that gives us a competitive advantage when it comes to sourcing and developing business opportunities in the country. So this slide just includes a timeline of some of the projects that we're working on. At the top line is Block 95, where our Britannia field is located. We are planning to conduct a seismic program next year, which will help us advance some exploration leads towards the south and east of us, where the Britannia field is located. We think that there are some very interesting exploration opportunities there, and hopefully would discover some Britannia lookalikes that could result in material reserves growth from the block. We also have another exploration block in the middle, Block 107. That's currently in the exploration stage. We're looking at some farm out partners for that. And then at the bottom, Block 131 is an acquisition that we've already announced back in May, and we hope to close that later this month. That's a producing asset that would include some near-term production growth for the company. So again, just zooming in on Block 95, this is our flagship asset, and it's a very large piece of land. We have a legend on the right-hand side of the map. It shows 120 kilometers from the far north end to the far south end of the block. So, the Britannia field, which is the dark blue arrow near the top, as you can see, is just a tiny speck, on this entire block. And that contains 100 million barrels of reserves. So we've outlined with a few other colored arrows there some of the exploration leads that we see, and we're hoping to get after some of those exploration opportunities over the next few years. Grand Tier Energy, the previous owner of the block, did conduct a 2D seismic survey over parts of the block back in 2013, and so far we've been able to identify 4 exploration leads from that seismic survey. So we're going to use our seismic program next year to high grade some of these exploration leads by the end of 2025. And we will hope that will give us enough information to drill 1 or 2 exploration wells sometime in 2026. So our CEO, Manolo Zuniga, likes to call this exhibit his string of pearls. And with preliminary resource estimates on each of these exploration leads showing recoverable reserves in the 50 to 100 million barrel range, that would be very material in the context of our current booked reserves of about 100 million barrels. Moving on to Block 107, this is another exploration lead that we have in southern Peru. The asset is a lot less remote than Block 95 because it is accessible from some major highways in Peru. As you can see in the bottom left of this slide, the resource estimates for this exploration lead are very large, perhaps as high as 500 million barrels. But this block is located in the foothills of the Andes Mountains, and it would be a fairly major drilling project. So we're currently looking to find a partner to farm into us on this block with a view to hopefully getting an exploration well drilled sometime in 2026. Excuse me. Moving on to Block 131, we have a summary of the asset in slide 17 here. We announced the acquisition of this block earlier this year. We acquired it from the Spanish company CEPSA. We're currently waiting for the acquisition to close, hopefully by the end of November. And I would characterize this as a small development asset in the center of Peru. It's currently producing about 900 barrels of oil per day. But this asset has seen a lot of underinvestment. CEPSA has not done much with this block for the past 5 years. They did build a facility on the block that would handle throughput of up to 5,000 barrels of oil per day. So it's really been underdeveloped, and we're looking forward to getting our hands on this asset, hopefully doing some low-hanging fruit completion work and maybe drilling a few wells on this asset over the next few years. I would just note that this asset is located close to the Peruvian city of Pucallpa, which is also on the Ucayali River. So our intention would be to truck crude oil from Block 131 to the port of Pucallpa and then take the oil down the river past our field to the Iquitos refinery as well. This field has very light oil, unlike Britannia's heavy oil. So we're looking at the possibility of using crude oil from Block 131 as diluent for our heavy oil at Block 95. Here's a bit more about Block 131, but this is also a licensed contract that runs until 2037, and you can see the facility infrastructure that CEPSA has built in the right-hand side of the slide. In the next few slides, I'm just going to review some of our recent financial performance and give you an idea of how well our company is doing financially. On this slide, we've summarized a few of our key financial data points for the year. With our next dividend payment in December, we are on track to return approximately $66 million to investors this year. Our current dividend annualized equates to about a 13% yield at our current share price. Our original guidance called for annual EBITDA of $200 to $240 million this year. And with our Q3 results announced last week, I would say that we're comfortably on track to reach at least the midpoint, if not the high point of that range. Similarly, in the middle column, we've shown our average production for each quarter this year. For the most part, our production has been fairly stable throughout 2024, except for the recently completed third quarter when we dipped down to just over 15,000 barrels per day. I would just like to point out that this was due to seasonal changes in river levels throughout the Amazon River Basin that impact our ability to export crude out of the Britannia field. So this is something that happens every year, and we actively plan for it. But this year, the dry season was unusually harsh. You may have seen in the news that the Amazon Basin experienced a drought all across Brazil, Ecuador, and Peru. So in that context, we thought we had very good Q3 results, and we're very pleased to have produced over 15,000 barrels a day during the quarter. River levels have rebounded quite sharply in the past few weeks as the rainy season has returned to the Amazon River Basin. And in recent days, our production has been over 20,000 barrels per day. So we think we're in very good shape to hit that 18,500 barrels per day number in the bottom of the middle column. On slide 21 here, we've summarized our return of capital. This slide in particular shows our history of making quarterly dividend payments all the way back to the first quarter of 2023. We pay a regular base dividend of 1.5 cents per share, and we have issued top-up dividends 3 times when high oil prices have allowed us to generate free cash flow well in excess of our development capex obligations. As of this quarter, we've cumulatively paid over $100 million in dividends to date, and we hope to continue the strategy well into the future. We see the Britannia field as being very well suited to support dividend payments. It's a high cash flow margin asset, and it has low sustaining capital requirements. So while some of our growth projects are also longer-term catalysts, we believe it is appropriate to return capital to our shareholders as we continue to advance those projects. On slide 22 here, I just wanted to take a moment to highlight our relative valuation within the peer group. In this table, we've compiled the EV to EBITDA multiples for a dozen of our peers, all of which have operations overseas. You can see the list of companies below. The average multiple for this peer group is 1.85 times EV to EBITDA, but as you can see in the light blue bar, PetroTal is currently trading at about 1.4 times consensus 2025 EBITDA estimates. So we think this is great value for a company that's delivering top quartile production and cash flow per share growth, along with a stable dividend, and that also has exploration upside. On this slide, we've benchmarked the same peer group on production growth and yield metrics. So as you can see on the left-hand side of this chart, PetroTal is one of very few companies that is able to deliver both production growth and a yield. Our production is on pace to grow by about 23% this year, while we're also returning $65 million to shareholders. So we would characterize this as a total shareholder return of about 36%, which we believe is impressive for a company of our size in the oil and gas sector. And just wrapping up, I wanted to highlight what we believe has become a key strategic differentiator for PetroTal, and that is our ESG philosophy. Over the past 20 years or so, oil and gas producers have found it challenging to operate in the Peruvian Amazon, but we are one of the true success stories in the country. We believe a key reason for our success is the degree to which we work with local communities at Britannia and in the broader Loreto region of northern Peru. So a few years ago, PetroTal proactively took the step to amend its license contract at Block 95 to include a 2.5% royalty, which is payable directly to the communities in the vicinity of our field at Britannia. So this social trust is administered by a committee of representatives from the area, and it has been tasked with investing in projects that directly impact the quality of life for local communities. Some examples of projects that the social trust has sponsored include providing internet access to local communities and installing solar panels for power generation. So that wraps up my prepared remarks. It looks like a few questions have come in during the course of my presentation, so I'll just go through them right now. I would just remind you that we have about 5 minutes left, so if you do have any questions, please feel free to submit them now. The first question is whether there is any possibility of an increase to the dividend. I would say that's certainly something that we're always considering. As I showed earlier on, I believe slide 21, we have issued top-up dividends in the past during quarters when our free cash flow has exceeded expectations. I would say that's something we'll certainly consider again in the future, but realistically, we probably need higher oil prices to do that. I don't see us issuing top-up dividends while Brent oil is below $75 per barrel. The next question is, what is your guidance barrels of oil per day for 2025? We have not issued guidance for 2025 at this point. We expect to do so in mid-January, which is about the same time that we did this past year. There's a few reasons for that. The first is that we're waiting for the acquisition of Block 131 to close, and we don't feel it's appropriate to comment on development plans until that acquisition is closed. And we just like to wait and see how oil prices settle out before we disclose our budget for next year. The next question is, can you speak to a timeline for the Northern Oil Pipeline becoming fully operational? That's something I wouldn't want to get into specifics on that one, but I would just say it's something that we're actively working on. If you follow the news in Peru right now, you're probably aware that Peru, which is Peru's national oil company, is going through a lot of changes right now. They've had some financial difficulties, and their board of directors quit back in September. So I would say that our management team is working very closely with senior management at Peru and in the oil and gas ministries of Peru to make sure that when the board is replaced at Peru and they have a management team that's properly aligned, that the operation of the OMP pipeline is going to be a key priority for that organization. I would say there's a variety of reasons for that. There's actually a lot of crude oil that's still stuck in the OMP pipeline, and if Peru can get it operational, that would be an important liquidity event for them because they would be able to sell that crude that's currently in the pipeline. So we're really encouraging a solution on that. Hopefully, I would say it's within the next year, but I don't see this being something that will happen in the immediate near term. Next question is, with the increase in CapEx, will the dividends be reduced in 2025? Again, I was saying we haven't disclosed 2025 guidance at this point, but I would say that we place the dividend very highly in our capital allocation stack. So, certainly any reduction in dividends, I would say, is not in the cards as long as Brent prices are where they are right now. We really see that as the main priority for our free cash flow, and if we're able to fund a dividend, that's going to be our top priority. So I do not expect a dividend reduction in 2025. Next question, what is the company doing to increase the share price? Understand the dividend portion, but share price has been steadily going down with no significant buyback. This is feedback that we get regularly, that we should be buying back more shares. There are a variety of reasons that we haven't been buying back shares right now. We do see better returns in our drilling program at this point. And we also do, for erosion control and the dividend, we do have some funding obligations that we want to make sure that we cover off first. So it's the type of thing that, if oil prices were higher and we had a bit more free cash flow, I think that we would be more aggressive buying back stock if it was still stuck where it is. But generally speaking, when we look at our peer group, I don't think that our share price performance has been out of line with our peers, certainly over the recent past. And I would say year to date in 2025, I would say that small cap energy, has had a tough time, and hopefully that turns around. The last question, why is the stock price falling? I guess it's related to the previous question. Certainly we're focusing on operations of the company and doing the best we can to ensure that investors have a good investment thesis. And, we're optimistic that as oil prices improve, that interest will come back to the stock. But I don't have a specific answer as to why the stock price has been falling recently. So at this point, it looks like those are all the questions that we've received in the queue. I want to thank you again for listening to our presentation today. I certainly encourage you to reach out if you have any additional questions. We'd be happy to take one-on-one meetings with you as well. So if you have the Calendly link, we'd be more than happy to sit down and talk with you about PetroTal over the next few days. Please feel free to visit our website as well. It's PetroTal-corp.com. And we do have an investor relations email on the website there that you can certainly send an email to, and we'll get back to you as soon as we can. So with that, our time is almost up. I would like to hand it back to the moderator, and